Hello everyone, welcome back to the channel. As per the income tax rules in India, every individual, including an NRI, must file his return of income in India if his gross total income is more than the basic exemption limit, that is 2.5 lakhs. If your income exceeds 2.5 lakhs in any financial year, you should have to file the tax returns in India. And like every other individual's, due date for filing return of tax will also be 31st July for NRI also. Now this is the very common saying and we all know this, that a person should file his return of income if his gross total income is more than 2.5 lakhs. But today in this video, we are going to discuss the things which go beyond this definition. Now in this video, I am going to tell you what are the situations when an NRI should file his return of income in India even if his gross total income is less than 2.5 lakhs, that is the basic exemption limit. And what are the benefits which he will get by filing the return. So, an NRI's income tax in India depends upon his residential status for the year. If your status is resident, your global income is taxable in India. But if you are NRI, your status is non-resident Indian, your income earned or accrued in India is taxable only in India. If your status is non-resident, income which is earned outside India is not taxable in India. And we all know that a non-resident Indian has a NRE account and also a NRO account. Interest which you earn from NRE account is a tax-free, complete tax-free, and interest which you earn on your NRO account is taxable in the hands of NRI. Also in NRO account, whatever interest you earn is taxable at the higher rate of 30%. There will be TDS at the rate of 30% in case of NRO account. So there may be many situations where your income is less than 2.5 lakhs, but still you have to file the income tax return. Like in case you have FD with any bank in India and TDS is deducted by the bank. So to claim the refund of that TDS amount, you should file the income tax return before the due date, that is the 31st July every year. For example, you're getting 1 lakh interest on your FD and TDS has been deducted at the rate of 30%, that is 30,000. Now, if you do not file the return because your income is below the basic exemption limit, that is 2.5 lakhs, you will lose your 30,000 TDS amount. And if you file your income tax returns, you can easily claim the refund of that TDS amount. Filing income tax returns doesn't take too much time, or you can take the services of any professional to file your income tax return. Now we take the second case. In case you have shares or debentures or mutual funds in India and you are getting short-term capital gain or long-term capital gain from the sale of those shares. In that case, even if your gain is below the basic exemption limit, you should file your income tax returns because you have to declare in tax returns whatever returns you are getting from the share market. And if your long-term capital gain is more than 1 lakh rupees, there will be flat 10% tax rate on your long-term capital gains. Similarly, if you have short-term capital loss or long-term capital loss, you should file the return to carry forward and set off those loss in the future years when there will be gain on your stock market income. For example, this year you have short-term capital loss or long-term capital loss. You can file your income tax returns and carry forward those losses to the future years. Suppose in next year you have a long-term capital gain or short-term capital gain. So the losses which you have carry forward to the next years will get set off from these gains and there will be no tax on your stock market income. So these are some benefits which you get when you file your tax returns in India. Similarly, even if you have no taxable income in India, you should file your nil income tax return just to declare to the Indian government that you have no assets in India and no income from India and your residential status is non-resident. Because government has no means to get information that what is your residential status, you are resident or non-resident. When you file your returns, the government comes to know about your residential status. To avoid any income tax notices in future, you should file your tax returns in India even if you have income more than the basic exemption limit and even if you don't have the income more than the basic exemption limit. There are some other situations also, like if you have sold any residential property in India and you have incurred any capital gains from there, you should declare your income and pay capital gain tax in India. If you have any residential property in India and you are getting rental income from there, then you should declare your rental income from India in your income tax return, file ITR 2. If you are doing intraday in stock market or FNO trading, you should file ITR 3 and not the ITR 2. If you are dealing in crypto or VDA, you should file the tax returns in India, because from assessment year 23-24, your crypto will be taxable at the rate of 30% in India, and TDS will also be deducted at the rate of 1% from your receipts. So I hope the situation will be clear now why income tax returns are to be filed by the non-resident Indian, even though their income is below the basic exemption limit. Thank you so much for watching this video. Stay safe and healthy. Bye bye.